My name is Julianne Peterson. I welcome you to tonight's Zoom at 8. You know, we're here every Tuesday night and we're bringing you great speakers so we can educate you. And then we go off and network. So hopefully you can stay with us the entire hour and a half. Again, we meet here every Tuesday night. So those of you who are brand new with us, make sure that you put it on your calendar because it really is worth the investment. We all become very good friends, but we're always looking for new folks. So if this is something that you find to be worthwhile, make sure you bring a friend. Tonight we have Cody Davis. Shoulda, woulda, coulda. If I was so young, I could have taken over many different assets in multifamily. But this is Cody, and he's going to tell us all about how he's doing it. So a little bit about Old Capital. We are a different kind of lender. We provide the debt on many different asset classes, but we really do like multifamily. But we bring you investors, we'll bring you partners in the deal. So if you don't have a sponsor, we'll try and put one into your team. So keep us in mind if you're working on a deal. I'd certainly like to have the opportunity to look at the debt. I'm going to go ahead and shift. We got to hear from Cody. Cody Davis. He is a Washington-based real estate broker and investor with Blackwell Real Estate. Since starting 2 years ago at Blackwell, Cody has acquired two 12-plex apartment buildings in his home state and is working alongside the company to scale nationwide. Due to the combination of not qualifying with banks and not having an abundance of money, Cody has become familiar with less conventional methods of financing. When Cody is not working real estate, he coaches young and upcoming gymnasts at the local YMCA. So Cody, I got to tell you, I'm super excited. My quick little story is I started when I was 22, and I know that you are younger than that. In fact, I have a kid who is 21 and only, I think, 8 days older than you. So when I heard that you were out celebrating your 21st birthday, it just warmed my heart because it's so nice to see young investors coming alongside some of us older investors who are really, driving business, are making some big decisions. And I'm just so excited you're here and to share your story, both your successes and some of your trials and tribulations. How are you tonight?
I'm doing pretty good. I've been running around since 4 a.m. this morning, so here we are.
I'm glad you probably don't even need to take a nap in the middle of the night or in the middle of the day, like maybe some of us older people.
I'll just keep on pushing, fall asleep at night, and repeat tomorrow.
There you go. Now, I got a phone call. Was it from Brandon, who's one of your partners in a deal? And he says to me, well, I've got my team here, and one guy is 21. And I said, I don't really care how old he is, but I got to know this guy. So that's how I met Cody, and just love your story and I want to know about you. I want to know, did you grow up in a big family? Did you grow up around real estate? Did you highly educate yourself early on when you were young? Tell me about how this whole thing came about in real estate for you.
Yeah, so I started out, it was with the Rich Dad Poor Dad book. That's where most people start. I was probably at 14 years old, so 7 years ago. And I grew up, I'm the first guy in my family to do the real estate investment path.
We bought 2 properties under the age of 21.
Uh-oh, we got a guy talking for you. There we go. Go ahead.
There we go. Yeah, so I grew up, separated family. Parents were split up when I was young, and no one was investing in real estate. My dad had a house. My mom had a house. That was it. So I didn't really know what I didn't know. I mean, that's all of us. But I read the Rich Dad Poor Dad book. I was either 14 or 15. Got super excited about real estate. Realized I couldn't buy real estate, and then I set it down for a couple of years. I picked it back up at the end of my high school career because I was helping out some family friends in the yard at one of their rentals. It was just a friend of my father's. And so I was like working in the yard and I helped paint. And they said, hey, you should join this real estate group. It was a Facebook group. They invited me to join in. And someone made a post asking what everyone was doing this week to get ahead. And I made a comment saying, oh, I have a couple job applications. I have it screenshotted somewhere on my phone, but I made a couple job applications and I was going to college at the time. I was in I think it was my first quarter at TCC in Tacoma. And I was just trying to save up money to buy my first duplex at 21 years old. Now, I'm glad I didn't follow that path, but from that post, my mentor as of today reached out and said, hey, you should come check us out. And then 2 weeks later, I was licensed as a real estate broker.
And you're at what age are you at this? You're probably 18.
I was 18 when he first reached out. I was licensed. It was right at the end of being 18. So I was licensed like the first 2 weeks of 19 years old.
Nice. And so,
so that was fun.
and so that puts you into single family, or did you get into multifamily at that point, or were you brokering commercial properties?
The first sale I ever had was a duplex.
Okay.
And that was for a friend of mine that worked at the local YMCA. He was a coach with me. We coached the kids. And he texted me one night at like 10 o'clock and said, hey, can you help us buy something out in Bremerton? And I responded 1 minute later and said, yes, I can.
Wow. And that was what started you on this path. So,
yes.
So tell me about, how did you get the down payment? Now, did you build your team? How tell me the whole steps of getting into this first 12 unit complex, because that's a big deal, especially for a lot of these people on this call. They're still building their team. So I want to know, how did you find your team?
Well, I mean, I'm really the team on that.
So you took it down by yourself?
I've got one partner, but I didn't partner with him for the money. The person that I got the money from is not a party to the transaction. So it was just a loan. I didn't want to give up ownership. Now, I gave up ownership. I actually did partner with the owner of the firm because he's been doing this for as long as I've been alive. And I figured it might be good to have someone like that on my first deal. So I partnered with the owner of the firm, but I found the deal and we found the money and we put it together.
Fabulous. So how long did that take you from the time that you started looking to the time you closed? Was this a quick transaction, or did it take you time?
I had it under contract one day after I found it. Wow. I saw it and I knew I had to have it. The reason I went with a 12, and I was kind of bummed it was 12, is we wrote up a 22 unit seller financeable apartment building in Central Washington. It was for a client. Now, this was going to be a $70,000 commission. My head was exploding and it was going to be awesome. And the buyer backed out last minute. He didn't qualify. He didn't have the money. And so Robert, the owner of the firm, said, why don't you just go buy it? And wow. I didn't know I could buy it, but I said, okay, how do I do that? And he walked me through the steps, talked about deeds of trust, promissory notes, what it would look like as far as going for the refinance to cash out or sell off some of the assets in a couple of years to cash out the notes. And granted, the seller carryback was long-term. It was like 15 years. So I wasn't worried about that part. The seller said no. We needed one extension for 1 week to get the private capital together. And the seller said, no, I'm not going to extend it anymore because the previous buyer, he was kind of flaky and he extended it, walked away, extended it, tried to keep pushing it down the line to try and figure it out. He couldn't. And so that deal tanked and it completely devastated me because I thought that was going to cash flow $5,000 a month. And I was 19. And I was just thinking, well, this would have been sick. And that's free and clear money. That's a lot of money for cash flowing at any age. And so I was devastated. Robert said, well, you go find another one. And then literally 5 or 10 minutes later, I found another one and I had it under contract the following day.
That is amazing. So how did you put together this deal? So tell me a little bit about what it took to get that, to take that down. Finance wise.
One thing I learned from my mentor is that you either get price or terms, you rarely get both. And so I just targeted terms because people that don't have a lot of money should target terms over price. In the way I've been brought up anyway. And so I negotiated 90% from the seller for 30 years, no balloon, 6% interest. So it was 10% down. So I was trading, so I bought it for $1.1 million. So I was trading like 110 grand and change for $1.1 million worth of assets. And I thought, wow, this is awesome. And so I was going to do anything I needed to find that money because it was a no-brainer. I can 10x the capital. Today, that asset's worth about $1.4 million. I projected.
You had that for how long?
A little over a year. It's been like 14 months.
Okay.
And so when I first looked at it, I was like, I think I can get this to be worth $1.5 million in 3 years. And just by raising rent $150, because I bought it on I want to say it was like a 7.5 or an 8 cap as is, with upside, because the rents were $775, and I walked in. I was the new sheriff in town, and when they left, I put rents at $950 and it rented out. So
amazing.
It was just ridiculous. But with
so
12 units,
this is like 2020. This is what month of 2020?
This was 2019. This was October. October, like the end of October.
So you're 19.
I was 19 at the time.
Yeah. Amazing. So keep talking about that. So it's owner financed. And how'd you find the 100,000, 110?
I asked a lot of help from folks in the office.
Okay.
I don't need to be the one-man show. I want to ask for help. That's something. I'm a Cardone guy, Grant Cardone. People love him, people hate him. He's loud, but he has a lot of success. And so something he said was just ask for help. Don't worry about what that makes you look like right now, because if you ask for help and you get to $1 billion, it doesn't really matter. You made it, right? As long as you're doing it ethically and asking for help. I just asked some folks in the office, hey, who should I talk to? What do I need to do? And I went through some investor meetings where I just bombed it. Like I went up at the board. My mentor was in the room. He's like, let's go through it. And my hands started shaking. My voice was cracking. And it was the worst thing ever. And we walked out of that and said, we're not getting any money, are we? He said, nope. Let's do it again.
Man.
But I had to go through the reps. And he said, well, how do you think you're going to get good at this? And it's by practicing. So I had a lot of flops and I had a lot of help. That was the biggest thing. I had one-on-one coaching for a couple hours on how to pitch, how to present, how to show numbers, how to actually voice what I'm saying, not just say it, but how I need to actually add tonality into that. And it all started coming together, and there's just enough investor meetings. I couldn't have done it the first deal on my own. The second deal, I could have done on my own. I wanted to get, because I had a partner and I'm 50-50. That's how I structured it, because I want his expertise, his legal structures. I said, let's do one more together. So we did the second 12-plex together. That way, if anything goes wrong in the partnership, he gets one, I get the other, and it's clean.
Interesting. That's an interesting concept. So how long was it between the first and the second transaction?
9 months.
9 months. And so your first capital raise, how long did that take you to capital raise the 110,000?
I think the money came in like 4 days before closing. It was something really close.
So if we've got a closing of 60 days, it took you about 60 days to close in capital raise. That's great. Now, did you put any money of your own in the deal?
I paid for the inspection. So I shipped out my go-to inspector that I had used for other multifamily for clients, because I just wanted him to go out there. So I paid a premium for him to go out there. Other than that, I really didn't have any money in that one. I think I spent like $2,000 for the inspection.
And that's just out of your pocket. That's fabulous. Now, tell me a little bit about the second transaction. How did you finance it?
seller financed as well.
Same thing.
That was an owner contract. I put 120 grand down. I bought that 12-plex off market on a 10 cap, Central Washington, same exact market. I overpaid for the deal, but I got a good deal. I bought that for $680,000. It was worth about 800 and change when I bought it. It was bringing in $7,400 a month as is, and now it's getting closer to 8,400.
And your debt service is what on that?
The debt service, so I'm paying 6% interest, so it's like, I want to say 40 grand a year.
Okay.
$3,360 a month. I have a $560,000 loan at 6%. So that's another long-term debt. That's a 10-year balloon. It's not quite as good as a 30 with no balloon, but it's still pretty good.
Yeah. And so did you take on these with 100% occupancy, or what did you? Yeah. Wow. Amazing. And are you doing much on a rehab?
Yes, on the second one. The one I got for 680. I mean, if you buy something for 680 and it's got 12 doors, if it's in a good market, it's got something wrong with it. That's the way I see it. If it's going to appreciate over time, it's probably got issues. And so this one had issues. Like, I had to completely gut one of the units. I had druggies in there. I tore down all the walls. I took it down to the studs, and there were needles in the walls. Like, they were just punching and patching. Terrible. And it was nasty. I mean, there was more needles than I have fingers on my hands. Like, it was gross. There was styrofoam that they were just laying on, scattered all over the bedroom, that was stacked a couple feet high. I don't know. Drugs are bad. That's all I got to say about that. But
well, yeah, stay away from them. That's a good thing.
Yeah, so no drugs. But
so, I'm curious about this. Are you a third-party property manager on both of those, or are you doing this by yourself?
The company I work with, Blackwell Real Estate, has its own property management division.
Okay.
Blackwell Property Management. Something that I've been growing since I started investing in real estate. We've also got Blackwell Capital, which is a private capital fund. So I've been working on the money raising piece just for practice. So last week I brought 200,000 into that. It's not related to anything I'm doing, but it's just for practice. And in April of this year, when COVID hit, I brought in like $400,000 to capitalize another deal. And so I'm getting a lot of exposure here, but it's just for different aspects. Because if I can do it for someone else, then hopefully I can do it for myself and keep on growing.
So you have a property manager. Are you on the property regularly, or do you not really spend much time on it and you're on to the next? Tell us, everybody, how much time you spend a week on these two transactions.
Maybe an hour to 2 hours.
A day? A week?
A week. I go to visit the property because I like to see it, but that's about it.
Amazing.
Now, the fixer-upper one, the last 12-plex I actually just got an unsolicited offer on it, so I may never have to go see that one again. They offered $940,000.
Amazing.
But
so what's your thought on the next transaction? Are you going to 1031 it?
No, I wouldn't. The reason why is I don't qualify for financing. Not even with the bank, like with a commercial lender, I don't qualify. I've tried.
Because you don't have enough income?
Correct. And they can't go based off the property alone because I'm not big enough yet. And I'm not going with a non-recourse loan because I don't have enough net proceeds to qualify for agency debt. I just can't get that big of a loan. So I'm kind of in limbo. I got to pretty much double what I have before I can start playing in that space. I've talked with a bunch of lenders, but I'm working on getting there.
Well, we can always help you take on bigger deals with a sponsor, and we can bring the debt as well. So there are ways of helping you on your next transaction, or on these simply the ones that you have now as a refinance at some point. But we don't need to worry about that right now. I want to talk about, what about your morning routine? Everybody talks about you have to have a morning routine. What about you? Do you have something that you're doing on a regular basis? Because you have the winner mentality. What are you doing?
I get up and I go to the gym with a personal trainer 6 days a week. So I do a high intensity interval training 6 days a week. Some people say it's too much. I say, well, I'm going to do it anyways. Cardone says do it anyways, so I will. But I wake up probably around 4 to 5 every day, except for the weekends. I sleep in to like 7. But make sure I wake up, do my training. I'm enrolled in a couple online universities. So I'm in Cardone U. I'm in Jordan Belfort's online university. And I did Chris Voss's online training, the Black Swan group. So I have access to all of those that I just go through, make sure I'm staying on top of it, because if I'm not expanding, I'm contracting. So I have to each day keep on refining what I'm doing. I come to the office. I'm usually the first one here and the last one to leave. And I'm actually sitting in the office right now. This is the Blackwell Real Estate was founded out of a 1890 mansion. It was the Blackwell Mansion in downtown Tacoma. Super cool building. But people say this is my second home because I'm here longer than everybody else.
Yeah. So are you doing the sales for commercial right now, or are you still on single family?
I haven't done that many single families.
Okay.
I did an off-market 15 unit a few months ago for a family friend of the owners. And I'm helping a buddy right now with a 9-plex on the water that's over in Central Washington, right on the lake for $625,000. So it's really good price for Washington. The rents on those units, once they're rehabbed, will be about $800 to $900 a unit. So it starts to pencil out pretty quick. But yeah, I don't do a lot of single family.
Okay.
I have a couple buddies I've sold flips for on the back end. I've sold my parents' house when he wanted to move, but that's not my focus because it's not what gets me excited in the morning.
Wow, you are amazing. Tell me about, were you driven like this in high school? Or is this something that you just got the bug and now you're really driven? What kind of student were you?
I was the type of student to get on my phone and do the voice to text for all my English papers. So I would speak my English paper, I'd get it done in 15 minutes and get a B+ to an A-. And all my friends would be like, I just got an A. I said, how long do you spend on it? 8 hours. So the biggest thing for me was I value my time. At least I did in high school. I don't put a monetary value on my time, but I know it's important. So in high school, I was just trying to get the best result with the least amount of time and make sure I was retaining what I needed to retain. And granted, I didn't do as well as the valedictorians. I probably got a bunch of A's, A-, and B's, but at the end of the day, I still had my time to go do things. And that's what's really important. People who guard their time. And I have to keep relearning this because I get sidetracked a lot.
Sure. We all do. That's a good thing to put in place. How about COVID? Can you share with us, did you have any issues at your buildings with COVID, with evictions? Tell us about that.
So I actually bought one of my deals a couple months into COVID. That was the last 12-plex. Mm-hmm. And it didn't stop me. The way I look at a deal is I say if $100,000 blows up the deal, it's not a good deal. I don't care what the size is. And so if a couple tenants didn't pay, it's not a reason not to buy it. Now I have one tenant who's behind right now out of 24. No, I'm wrong on that. 2 tenants, 1 on each building. But
that's not bad.
They cash flow even if they're at 60, 70%. So I'm not too concerned about it. Yeah. The biggest thing is just if the deal's good enough, I mean, unless the total economy tanks and nobody has to pay, I think it's the 18th, they're talking about a potential 2-year expansion on the eviction moratorium. Right. I think I saw that earlier. Like if that happens, which it might, then that might be rough and I might lose everything, and I acknowledge that. But I noticed there's a written law and a natural law, and the natural law is that people want to pay for things they get service for, and most people are good people. There are some bad apples in the bunch, but as far as COVID goes, I've been just fine.
Fabulous. So what's on the horizon for you? What's the next couple years look like for you?
I'm working on a 6-plex and a 16-plex right now. Both of those are seller financed off-market deals. The 16 unit is, I'm trying to buy all in the same market right now. So the 16 unit is going to be around 800,000 if it comes through. It's another value add play. It brings in close to $10,000 a month, so it's not the highest of rents. And then the 6-plex is an off-market opportunity that is for 300,000, brings in 4,200 a month in rents. Same market. When it's stabilized, there's a 6-plex that sold down the street. Now I know they don't comp out like this, but a 6-plex sold down the street for over $600,000, over 100,000 a unit. And so I'm being conservative. If I need to fire sell it on an 8 cap, because I'm buying it better than an 8 cap by far, that I can sell it for around $540,000. And so it's seller finance, 50 grand down. One of the lessons I learned is you don't want to add, you want to multiply in real estate. It's a multiplication game. So I invest the 50. Let's say I get it to be worth 540 and I sell it. Well, after fees, I get 200 in equity plus the 50 back. I 5x the money plus cash flow. So really, for me, I'm just trying to build equity safely, because until I have enough equity, I can't get backing for these bigger loans. And I don't want to, I'm not a syndicator. I haven't given up ownership to these guys. Maybe it's down the road, but I've learned that I just have to build my story. And part of that's kind of doing lone wolf in the beginning.
Yeah, for sure.
Adding in partners down the road to make it happen is, it could be appealing. I don't want to give up control, but I guess over the next 3 years, I want to get to a point where I'm about $10,000 to $12,000 a month net passive income.
Amazing. Just truly amazing. I'm in California, where ours are buy 2 for $1 million. I'm just amazed you can buy a 16 at $800. It's just crazy. And I'm making $1.75 a month. So, it's just crazy. The markets. I'm curious, I know you're a broker. How do you find these deals? A lot of people say, what is the strategy? Are you sending out letters to owners? Tell us about that.
The main thing that I've figured out is just hone in on one market and then convince yourself it's the only opportunity available. There's too many people that are looking, I want to go invest in Texas. I want to go invest in Louisville, Kentucky. I want to go invest in the middle of nowhere, like wherever it is. And I just picked a market that I was like, okay, I can drive there and back in a day if I need to. I can put up cameras to see everything. It's just one market. It's got a sizable amount of people. It's not huge. The city's going to be at like 40,000 people in the next couple of years, but it's not big, but it's booming. It's doing really well. Property values have gone up 18% for the past couple of years consistently. And I'm not buying for that, but it shows people want to move there. And it's upward growth trends for longer periods of time than I'm seeing in Tacoma, and better trends. So I just picked, okay, I'm going to look there. I'm sold on it. It's the only option. It's like I'm marrying a location. Yeah. And then I look at every single multifamily deal, neighborhood by neighborhood. So that's what I've done for over the past year. I have looked at every single deal in the city.
Every single property.
Every single multifamily property that I could get my eyes on. I started digging into it, and that's a long process. It doesn't happen overnight. It took over a year. Like I've been doing this since I first got my first place over there. So it's been like 14, 16 months. And because of that, I'm familiar with all the names of the owners. So when I have conversations with people, they're like, oh, that's so-and-so. And it's like, oh yeah, I talked with them last week. And it gives me more credibility. And it's more of a story because especially at a young age,
Yeah.
I was at my property and one of the, I don't know if it was a UPS, someone was doing like a census and they came and they thought the tenant was my dad. And so it's just, that's how they perceived it. And so I have to have more backing and credibility to have those conversations with folks, but really specializing in one market, looking at every deal. It's really easy to pull phone numbers. I just look at excise tax affidavits and 50% of the time I get it. And if not, I figure out where they live. And then I source that with their job. Like I figure out where they work. And then I've done this before. I have a flipper buddy. He was trying to combine two lots and he wanted to sell one of them to the neighbor because the neighbor was trying to build on the back of it. And he tried for months, couldn't figure it out. Since he first bought the property, now this was 3 months later, and it took me about 10 minutes. I found out he worked at the local dump, gave him a call at the dump number, and he said, oh, here's my personal, I want to chat. And so I don't think people keep on pushing when they get pushback, but figure out where people work. There's always a way to find somebody's phone number. I mean, there are some ghosts.
Maybe we need you to take us through how you do that another time so we can help educate how you drill down to find these people. I mean, because a lot of people are writing letters and, you know, as a landlord, you get how many letters and you just throw them away. So I'm always looking for creative ways to contact these people. And you've really given us some interesting thoughts on that. Who inspires you other than Grant Cardone?
My mentor, Robert, he's the owner of the firm. Without him, I wouldn't be here. So to say he isn't inspiring would be a lie. I look up to him with everything. If he says do something, I'll do it. I don't care what it is, as long as it's ethical, which it always is. But Robert's the owner of the firm. He's been doing this for like 20 years. And if he wants me to fly to Florida on a whim, like he told me one night and we flew out 4 a.m. the next day. Like I got up, got to the airport and off we were. And I was gone. Like that's the kind of respect I have for him. He's taught me to avoid easy money, even though I've done very easy money, seller financing, raising private capital, but it's not a sustainable business model forever. And you can't keep scaling up like that. So he's the type of guy who advises, don't leverage your home to invest in real estate. I resonate with that a lot because if I need to jettison the real estate, I can keep the home. But it's things like that. He's a very anti-risk guy. He lost, it was $1 million cash and $3 million worth of real estate in 08, over the course of 3 years, like 08 to 11. He got out of real estate. He was originally a tech guy, I think at Microsoft. And so he's been doing this for a while, but he's very anti-risk. So he follows Dave Ramsey. He wants to build to a certain level, then pay it all off.
Interesting.
So you build to a passive income on the gross, whatever you're happy with, you pay it all off and boom, you can retire in 10 to 12 years. So that's kind of who I look up to the most. I mean, I put more respect to him than anybody.
Wow. You're really lucky. He's lucky to have you, but you're really, really lucky to have somebody help you, guide you like that. As you know, I'm a little jealous, not going to lie. That's really awesome. I heard you're speaking about some podcasts that you listen to or people. What about books? What do you like? What do you follow? What has really been something that you would say everybody has to read this?
I'm going to be biased because everyone knows I'm a Cardone guy. 10X Rule. If you haven't read it, you should read it. 100%. Every goal that I've ever set was too low. I wanted to buy a duplex at 21, 10X that. That was accidental. But that's just something like when I started thinking bigger, like my mind started to open up and I learned the more I do, the more I can do. And then the more I can learn. So the 10X Rule was eye-opening for me. I'm sure a lot of people on this call have read that book. Dave Ramsey's Total Money Makeover being a real estate agent, I try and sell properties to my buddies. Well, it turns out all my buddies are broke and going to college. It's student debt. They're drinking, smoking weed, like doing all the normal 20, 21, 22-year-old things.
Yeah.
And I try and get them copies of the book because Dave Ramsey's Total Money Makeover. I mean, that book, personal finance, that is the only model that works 100% of the time. It's the only one because he's anti-debt.
Yeah, right, exactly.
There's risk, and it doesn't matter if it's a little risk. There's always a little risk, and it could go wrong. So that's definitely an awesome book that I read. Getting personal finances right is huge.
What do you like to do? What do you like to do on your downtime? I know you're doing the gymnastics thing, and I'm curious, like, what, as a 21-year-old who owns property, I mean, it's pretty incredible, I have to say. What do you do on your free time?
Free time?
Okay.
I don't think there's a such thing. Something I learned from Cardone, white space is like the devil. It's not good. You don't want white space on your calendar. So while my calendar is not filled, I'm not good at filling it on the virtual sense. I'm always busy. And if I'm not busy, I find a way to be busy. Because if I'm busy doing something productive, I can't do something that's going to degrade me and put me in a bad place.
Yeah. Now, I did see something, and I'm just curious if you might be able to redo it. I don't know what kind of space you have in your office, but I did see a flip. Is that something that you might be able to show us, the flip that you did on Facebook?
Oh boy, you saw that. As long as no one else sees the caption.
I mean, I'm wondering if you might be able to do the flip.
Yeah, I can do the flip.
Yeah, let's see. Everybody wants to see the flip, right? 21-year-old multifamily investor can do a flip on the Zoom at 8. I mean, There's nothing like it. Let's see it. We didn't discuss this, but I really think this is something that we need to document.
Wow. All right. Well, it should be easier. I mean, you read the caption, so it should be easier to do today than it was last time.
Yes, it was their 21st birthday, so we're going to give you a little bit of relaxing on that. Oh my God, I hope that look at that. Can we get a round of applause? Can we get a round? Let's see the people in the audience. They are really, really excited to see that. I mean, you pay big dollars to see that. Cody, I am so lucky to know you, to understand what it's taken to get to where you are. I'm completely impressed, kind of jealous, not going to lie. I would love to open it up to the other people in the audience. See if we've got any questions for this young stud. Yeah, James is in the house.
All right. Hey, Cody. Great story, man. Congratulations. I wish I would have started some years back myself. I have a question for you. I recently, last couple of years, read Rich Dad, Poor Dad, and that kind of pivoted me in a different direction, the direction I'm in now. What did you get out of it as what were you, 14 when you read it? I mean, how did it impact you back then?
I just didn't know you could get money for owning things. So I was at that age where I didn't understand that. So it really just showed me that I wanted income coming in without working. Or working is relative, but I wanted passive income. It just opened my eyes because I didn't know a lot. I mean, I feel like I still don't know a lot. I got to keep on learning, of course, but it opened my eyes to possibilities that, there are business opportunities. There's like cash flow. I didn't know about that. And I actually got the book from one of my parents' ex. So it was super random.
I hope you've gone back and said, hey, thanks so much for giving me that book.
Oh, I've stayed in touch with them. I raised $100,000 from them back in April. So.
I love it. Who else? Thanks, Cody.
I'm impressed that you got the value out of it back then. Good job.
Thank you.
I have
Who
a
else?
question.
Sure, Alicia.
Cody, how are you tracking your multifamily properties that you're reviewing? Like, are you using a system? Do you have a spreadsheet that you keep the information in? And how are you absorbing all of that information? Probably because of your youth, but just curious.
Yeah, I'm actually trying to find it. I don't know if I have it here. I use a spreadsheet. Let's see.
You're
I don't know
welcome to
that I-
share it. You're welcome to share it if you want.
Yeah, I'm just trying to pull it up. Let's see. Sure. Let me bring this in.
We won't steal any of the information. We all
No,
promise.
you're not going to steal it because I'm going to send it to everybody.
Okay, look at that.
I have no secrets. I don't need secrets. Let's see. Share screen. Boom. Everyone see this?
Oh yeah.
So this is just a blank version. I just put in some random properties. Don't call these guys. I already called them. But these are just properties I was looking at, I don't know how long ago, months and months ago. So I just used, as you can see, I just put in property information here. What I picked it up for it, you can kind of see, okay, well, what's the name of the complex? Beverly. That was my first place. I got Beverly Apartments. I look at, okay, what's the last sale? Well, that's when I bought it. What's the mortgage? $1 million. What's the actual address? What's the acquisition? Is there a rehab percentage? What's financed? So this shows the 90%. I'm just playing out strategies. What could happen? And then what's my cash needed to close? So I raised 125 on this to have a little bit of reserves. But I just list, okay, I've got units. What's my price per unit, year? It's just a brief overview, what it looks like. And I can put an interest rate. What if I get IO? What if I get principal and interest? What's my actual cash on cash return? And then what are notes? What is a potential exit strategy? And I can change my loan amount. So this is just a spreadsheet. If you guys want it, I can shoot it to Julie. You guys can have
Yeah,
it.
shoot it over and I'll get it to everybody. You know, Cody, we run through, you know, I don't know, 10-page Excel spreadsheets that, you know, we're all sizing on. I love the simplicity of yours. I'll be anxious to see how you move into larger deals. You're probably going to write the software anyway, so we'll take a look at that. Anybody else have a question? Jalen is in the house. Jalen, you're 20, aren't you, or 19? How old are you?
I just turned 21.
Okay,
not too
21. We
long.
got young guys in the house. I
Mhm.
just love this. This is the next generation. We're not shoulda, coulda, woulda. If you're over 30, the time is now. Let's get into this. Does anyone else have a question? Anybody? Just start
Well,
blurting it out if I don't see you.
Hey, Julianne, it's Bruce.
Hi, Bruce.
Cody, congratulations on having the mindset to accept the information that you received, to be able to use that information. But one of the things in real estate that you've taken and you've honed, as you know, is the specialization is such a key. Become that person in that area, in that space, and be that guy. So congratulations on really taking that, and your mentorship has been just amazing. So congrats.
Thank you,
Appreciate
Bruce.
that.
Yeah, you are a big inspiration for so many of us. And you know, on the lending side, it's always interesting to see. You know, we never did over the last 18 months. We've really gotten a lot of younger students of multifamily into this, and we're seeing that. Hey, now we do bridge because people are like, oh, that's okay, I'll do it in 3 years and I'm out. Where the old generation, you know, in multifamily was like longer term. We're going to be slow. We're going to hold this. And so it's really interesting to see how the young folks in multifamily, the risk is no problem. I'll just get it done. And so you can see from Cody's simple spreadsheet how he understands his properties are, you know, so easy, and he's not going to fail because it's his mindset. And I just find so much joy in that. Is there anybody else in the house before we say goodnight? Or Cody, you are welcome to stay with us tonight to network. Everybody, I'm sure, would love to get to be with you if you're available. So one more question. If there's anybody else who wants a moment with Cody.
I have a question, Julie. This is Vinky.
Sure. Hi, Vinky.
How are you?
Good, thanks.
Hey, Cody. Thank you for coming today. Congratulations on your achievements. Super awesome.
Thank you.
I just wanted to pick your brain since you're so young. So what does the future look like to you?
Well, that's a very big question. A lot's changed in 2 years. I don't really know what to expect in another 2. But one of my goals, one of the driving factors behind this, within my family, we've got a lot of health issues like mom, sister, aunts, uncles, and next generations above that. So I've got a couple organizations, like I've got family members with type 1 diabetes and things that like they got at age 8. Like that's just not fair. So there's a couple of groups, associations I want to donate to. And when I was doing the math, I like to break everything down to the ridiculous, like make it extremely simple. And I did the math. If I donate $1,000 a month, $10,000 a month, or $100,000 a month, what's going to be the most helpful? And so I put it at the numbers on the paper, and I realized, okay, I've got 5 organizations. I want to donate $1 million to each every year. Once I turn 40, I want to be able to do that and it not matter to my personal finance. I want to be able to give back, and like having direct family that have experienced all this, like I want to make sure that those groups are covered. I had a family friend who died of ALS. So I want to be able to donate to that association. Like I watched someone completely healthy lose everything, couldn't talk, couldn't walk, and just gone. So I want to be able to give back to those groups because that's what the money's for. We don't own money, we manage it, right? So that's it. I mean, I just want to grow after $150,000, $200,000 a year. Making more money is just so you can give more money. It's not to use more for yourself.
Wow, I love that. Oh my God, who can stop you? Nobody can stop you the way you're going.
You are so wise, Cody. It's such a treat to have you in the Zoom at 8. And I hope that we can have you back a year or 2 years to see how you've grown and all of the accomplishments. I just thank you so much for taking the time tonight to be with us.